Remind investors that a pause doesn't mean that the Fed is finished. I want to bring in Banríon Capital Management CEO Shana Sissel. Shana, so tomorrow is being dubbed as a hawkish skip. Now, it sounds more ominous than a dovish hike. So, I mean, shouldn't we be excited, though, that the Fed is at least willing to pause and see how their handiwork is impacting the economy?
Yes. But I do think that we need to remember that Australia and Canada did something similar, and they still hiked again because it seems that central banks are much more concerned about anchoring that inflation number than any potential for a recession. And keep in mind, recessions aren't bad things. They're the things that regulate things getting too out of control.
Depending how deep it is, though, right? We can live in a shallow recession.
A shallow recession is what we would like to see, and the likelihood of that happening is more likely if the Fed does continue to keep that hawkish rhetoric, I think.
All right, yeah, Francis talked about the hawkish rhetoric, but what about how many more hikes can they do before they can take a potentially shallow recession and make it something far worse?
So the market is pricing in at least one more 25 basis point hike between now and the end of July. Will it be this meeting or next meeting is the question. I think it's more likely to be the next meeting. Right. Depending on what we see in terms of the continued strength in the employment markets, we might see a second 25 basis point hike before the end of the year, but I don't think there will be more than that.
But wage growth is slowing. Mm-hmm. We saw initial jobless claims spiking. Mm-hmm. We saw quits. I mean, people are now not quitting their jobs, right? Before they were telling the boss, I'll see you later. They weren't even showing up the second day of work. So it feels like there's obvious signs of weakness even now in the labor market, no?
No, absolutely. We saw elevated new claim data, but it was a holiday week, so you can take that with a grain of salt. But we are seeing a rise in challenger layoff announcements. So that's usually a 3 to 6 month lag on claims because they announce it, but the layoffs don't happen immediately. Right. And then when you look at the CEO Confidence Board data, CEOs are saying that they see a decrease in workforce, and that is the trend for the last couple of months. The number of CEOs seeing decreasing workforce is rising or staying flat, but we're not seeing a lot of projections of potential new hire activity.
So let's talk about investing in this environment because this is what you're best at. I find these are some of, by the way, the signs, the economic weakness signs that we just talked about, CEO confidence, ISM, initial jobless claims. But I want to talk about, though, investing ideas. No tech up here. There's no tech. So you're not talking tech. You're positioning for the next big moves. Southern Copper, what's going on here? So
what you'll notice as kind of the trend in what I'm doing here is I'm looking for opportunities that will benefit from a decreasing liquidity environment. So tech and consumer discretionary and names like that benefit when there's more liquidity in the system. Right. We're going to see liquidity being pulled from the system in a variety of ways going forward. So that tends to benefit things like materials, energy, industrials, and healthcare, things of that nature. So that's the trend you'll see here. Southern Copper Materials is a place that will benefit as liquidity comes out of the system. Copper is 4 times more involved in EV than in traditional ICE vehicles. So Southern Copper is a leader in that space. That's why that's on my list. Leidos, we've talked about before, a defense contractor, 100% market share in screening security technology. Just had a change in their CEO, but a lot of insider buying, so that's a really bullish sign.
Let me skip to Caterpillar because I got less than a minute to go. Is this also a play on maybe now the global economy rebounding, particularly China, because they get a lot of their revenue outside this country?
No, absolutely. I think that that's definitely part of it. But I also think that this is a management team that has executed really well through some difficult times, strengthened their balance sheet. They have a great capital allocation strategy, buyback strategy. So there's a number of good things to like about Caterpillar. Also trading at a relative discount. So, from that perspective, I think there's an opportunity there as well.
I've always loved Caterpillar. Shana, thank you so much.